A very good afternoon to each one of you. On behalf of BCIC, we welcome you all for this webinar on GRI Sustainability Reporting Standards, organized under the aegis of Sustainability Expert Committee of the Chamber. I'm Rupa, Assistant Secretary General at BCIC. The Sustainability Expert Committee is chaired by Mr. Rajesh Kumar, Country Environment and Sustainability Manager, ABB India Limited, co-chaired by Dr. K.S. Ravichandran, Managing Partner, KSR and Co. Company Secretaries, and mentored by Mr. V.C. Mohan, who is a former SGM of EHS Management of Bosch India. Welcome you all for the session. The Chamber acknowledges its immense thanks to all the annual sponsors who have been supporting all the initiatives of the Chamber throughout the year. Dr. Ravichandran will be joining shortly. I request Mr. Rajesh to take it over from here. Over to you, sir.
Yeah, so thank you so much. Thank you so much, Rupaji, and good afternoon again to all of you. And before we start, Mohanji would like to add anything from your side, like how you want to set any context over here, and then we'll take it forward. Just quickly take up the topic also. Yeah. Thank you. Mohanji, you would like to add anything? Otherwise, I'll just start the topic in that case. Yeah. You are on mute in case you are speaking. We are not able to hear you. Okay, so Mohanji I think he's having some, issue with respect to the headphone. No issue. So the point is, so today we are in fact going to discuss on this topic called the GRI, I think Global Reporting Initiative. I think we all would have heard about this term. If we have reported any such, a sustainability report or anywhere we have had any interaction with any of the companies who are working on this sustainability topics, I think this GRI surely would have been heard by the company, in fact, right? So with this topic, in fact, our speaker, in fact, would be, Ravichandranji also would be joining soon, but I would give a base, the foundation of that. I'll be just sharing with you how this entire topic has, come up, how we all have been working on it, and how this would be supporting all of us to improve our external reportings, right? So with this, I'll quickly share my screen and just Rupaji, let me know once we can see the same. Yeah.
Yes, sir.
Yeah, please.
It's visible, sir.
Yeah, perfect. So, perfect. So though we have a sustainability reporting, is a topic, I'll also take you through the entire base, what we talk about, the ESG, what we have, right? The environment, social and governance. And of course, when it comes to the GRI guidelines, and it also talks about the economical aspect, environment, social and economic actually, because we have a 3-pillar approach. We call it the planet, profit, and anyone can add that also if you want to unmute, or maybe you can put it in the chat box. People, planet, and profit. I think we call this 3 Ps, which are actually deriving the entire sustainability. And of course, from there, we can understand that each and every area that how a company should perform to address this topic, right? So here, but I'll also bring that governance aspect, because the social part, of course, would be dealing with the human aspect, human factor, where we are talking about diversity, health, safety, multiple things on gender equality, employees and all. Environment, I think we also would be knowing that how carbon emission, GHG and all these things are related to that. Similar way in governance, we also have various policies and procedures which are actually gonna be understood. And of course, we have to address as a company, as an organization, to strengthen our overall ESG performance. But I'll also show you a kind of overview on evaluation of our ESG reporting, and even the India's one. Okay, so if you see the GRI, you can see in the middle of the screen, Yeah, I'm just putting the pointer. So you can see on the middle of the screen that we have a what called GRI, right? It's a global reporting initiative. And I think that's why it's called, actually, it's a mother of all the reportings. You would be aware that all the reportings that has started across group, somewhere or other, the GRI has been the foundation of that, right? And there in this entire reporting system, when we see our India's reporting system is also actually built based on this particular GRI guidelines. Okay, and what it is, what exactly is this GRI guidelines? Everything, of course, I'll give you the slide brief on that, and of course, I'll be handing over after that to Ravi Chandranji, who would be taking us through the more detailed approach about this GRI and how it is governing the entire reporting system. Right. So here, besides our own BRSR, as you all are aware, business responsibility and sustainability reporting. Similar way, GRI somewhere is also giving the entire approach to European one of the reporting system. You might be aware by now, that's called CSRD. CSRD is nothing but corporate sustainability reporting directives, right? So this CSRD, same way you have a NFRD. You can see at the bottom, of course, all the full form of individuals are written. Like example, NFRD is nothing but non-financial reporting directives we have. Then we also have TCFD. I think you would have also heard about, even specific to climate change, there have been multiple disclosures. Like example, TCFD, which is nothing but the task force on climate related financial disclosure, right? It's mainly related to the climate. So here you can see all the reporting system. It has been either derived from GRI or similar, kind of requirements, different reporting systems have tried to adopt, right? And that's why the GRI, it's put in the middle, and you can imagine that how environment, social and governance would be addressed by this reporting system. Similar way, you can see over here, we have a SASB. Generally in many other countries, like of course US and other countries also, this particular things have been adopted, in fact. And of course, SASB is nothing but, again, Sustainability Accounting Standard Board we have, where clear standards are being given on environment, social and governance, right? So here, as we discussed till now, that yes, there are multiple reporting systems across globe, and GRI is always the base or the foundation of all this reporting system, like BRSR, CSRD, TCFD, SASB, NFRD, IFRS. In fact, multiple reporting systems would have been, of course, derived from this GRI. And I think if you see the overall, kind of standards, so as I mentioned earlier, this is also very similar to the standard like BRSR. I think you all would have been, heard about the BRSR, right? If in case your organization is listed, you would have surely heard about the BRSR is nothing but business responsibility and sustainability reporting. Similar way, GRI, which is giving a voluntary, in fact, requirement. GRI, please note that it's not a mandatory requirement for any companies to adopt and publish any data, right? It's like it's giving you a standard, a kind of requirement. You can follow it and you can improve your environment, social and governance aspects, right? So here, of course, as you can see on the screen, it's a global framework. Of course, it's not a mandatory framework like BRSR or CSRD for Europe, what it has become now. And of course, as I mentioned earlier, the GRI guidelines also is focusing on three pillars, right? Maybe you can put yourself in mute kindly. Thank you so much. So it has been focusing on three different pillars. First is, of course, your economic. Second is environment. And of course, third one is, of course, we have a social part. So what I showed you earlier, the environment, social and governance, from there itself, you can imagine that even the GRI standard, which is a mother of all the standards in ESG, is also addressing this three pillar approach. And of course, economy is it has been considered as one of the pillar, considering you cannot run a business if you are in loss, right? You cannot just do any activity in the world and you don't focus on it economics. So even economical aspect should be considered while taking any decisions. It's not, yes, we all have an internal carbon pricing in place. We also do follow multiple kind of project ROI based approach, but economic also is very important along with the environment and social pillars, right? And that's why the standards would be focusing on three pillar approach called economic, environment and social. So as I showed you in first slide, the environment part, of course, all this pollution, energy, water, product, circularity, or even the kind of the GHG emission, all these are part of the environment. Social is mainly revolving around the pillar of the people part. As I mentioned, profit, planet, and people. Of course, people is of course linked to the social part, where we are talking about the employees, contractors, communities, suppliers, and their well-being basically is part of this pillar. And of course, the economy, as I mentioned, is also a very important aspect to run a business, along with bringing a quite better equilibrium among all these pillars. So environment, social, and finally the entire economy can be running smoothly. And of course, the GRI standard, if you ask me, it supports you entire in transparency and stakeholder communications. You have a reporting system also could be derived from there, and you can communicate to your stakeholders. The GRI, as I mentioned, global reporting initiatives, it gives us the entire kind of framework or guidelines through which you can bring more transparency in your system, and of course you can communicate to your different stakeholders. Perfect. So if you see how the structure of GRI standard looks like, okay, so of course you might be knowing there are GRI guidelines one, GRI 1, 2, 3, and then we have a topic specific standards. Then we have a modular and flexible overall approach. In this we have, and of course, if you break down to GRI standards, you'll find GRI standards mainly it's on three different sections. Generally, we'll find it, right? So, of course, GRI 1, 2, and 3, where GRI 1 would be taking care of the entire, the base, the foundation of entire things that we'll be talking about. GRI 2 will be, of course, giving the general disclosure. What all the general disclosure a company must or any organization must do it. And the GRI 3, of course, which is section wise, if you ask, the material topics would be addressed or it will be discussed during this particular area. It's a GRI 3, what we call it, right? So now let's come to the topic specific, if you ask me. So we have a different standards, right? So till now, what we have seen is, of course, we have understood what all the environment, social and governance, three aspect of ESG we have. Then we also saw how BRSR, TCFD, SASB, in fact, CSRD, all these reporting systems have derived from GRI, and how it has become a mandatory part for many areas, but GRI always been a voluntary for any company to adopt and improve their own sustainability performance. But in this, in ESG, how different series of GRI, this naming also is there where you can refer that. Yes, the GRI 200 series generally deals with the economic part. Then we have a GRI 300 series, which deals with the your environmental part. And of course, when we have a GRI 400 series, which talks about your social aspect of reporting or standards overall, what you can say. Okay, so these are the basic different topic specific standards that we can see over here, that we can understand from there, and we can understand what are the requirements under which that we have to follow. Example, maybe environmental part in GRI 300 series, so maybe 301 or 302 or whatever the numbers will come, they will ask you, okay, whether you have set a kind of environmental policies, you have kind of, do you monitor the GHG emission, whether you have GHG emission, what are the scope 1, 2, and 3 that you are monitoring. Similar way in social, they would be GRI 400 series, they will be having a numbering in that, where they will be asking that, okay, whether you have a policies related to social aspect, whether you have a human rights related policies, we have whether you have a supplier human rights policies. So those kind of questions, and according to that certain action what we have to take, that also should be derived out of this particular standards. uh right, so Rupa madam, I hope KSRG has joined. Has he joined till now?
No, A to join, sir.
Okay, okay, just you can confirm. So I'm just actually trying to cover the basics so that Mr. KSR, who is going to take you through the more detailed one, and you can understand the the overall requirement of GRI from this aspects, right? Perfect. So now how the reporting happens also, I'll just give you a brief idea. So as I told you earlier, that how different GRI guidelines are there based on different series also, under which certain questions will be there, where it will be asked that how the environment, social, and of course economical, or you can say the governance aspect would be taken care, and what are the areas that a company has to focus on, right? So how the reporting also should happen in different steps we should understand, starting from of course understanding the standards, then overall understanding the overall material topics. So here, maybe I'll just maybe till our speaker joins, maybe I'll also request all of you to share your view on this. Example, when you say material topics, can anyone put it in the chat box that what are the material topics that we are talking about? Because in GRI, it is also very important that if every areas, the 200 series, 300, 400 series, we have to of course understand the requirement, and of course we have to report certain data, or we have to capture the activities and we have to report to external body. But what are the material topics a company has is also important to understand, based on which this GRI guidelines also can be quite helpful. So maybe I'll just quickly request all of you, you can put your questions in the chat box. What are the material issues that you have found out in your area. So okay, thank you so much, Mr. Hemant sir. I could see like you in your company, maybe emission you're talking about the GHG emission, I hope so, right? So there are multiple kind of course issues are there with respect to GHG emission. We also have a waste management, right? It could be of course waste management is of course could be a the waste related issues could be one of the material issue. Example, a company which has a huge kind of waste generation or hazardous waste generation which is not being recycled, okay, and it's being of course sent to the landfill, of course, when you compare with the other waste. So that could be one of the material issue for the company, because it's okay, this is actually linked to the material consumption, right? At the end of the day, remember that even the material consumption is linked to your waste part, right? Somewhere, because more the material consumption and you don't have any recycling of that, means your circularity approach is also weaker. That could be one of the issue. Of course, even the water consumption, a water intensive company like maybe any beverage companies, or in fact even pharmaceuticals and many other companies who have huge water consumption in their premises, right? And for them, actually it becomes a very important topic as a material topic, we call it. Material topic is nothing but, again, it's one of the most focused area or important area for that company, okay, in that particular area. If they don't focus, of course there could be a huge implication on the overall business of the company also. Like that's why the climate change, we always keep it on top, and we tell that yes, emission is one of my, the GHG emission or GHG, climate change, basically you can say climate change impact is one of the my most important materiality issue what we have observed. Similar way, many companies would be having a issues with respect to, even, see, we have mainly have seen whatever there in the chat box is related to environment, but there are other, many other issues. Like example, the diversity what you mentioned was one, but human side, like if you see, even many people are finding even the child labor issue or any human right issues that are that arises because of maybe shortage of manpower in that region. So it cannot be so generalized that material could be only one issue, could be, right, maybe water or waste, but it can be even the social aspect could be your material issue, right? Similar way, your material issues can be related to your even governance aspect or anything. Example, even the cyber security issues that people are seeing nowadays could be one of the issue related to your materials, we call it, right? So these are some of the material issues that we have currently. And that itself very important to, in fact, tell you what all the things we have in our, just a minute, yeah. 1 second. Yep. Okay. Perfect. So now next step comes as a selecting your topic standards. Now, what is the topic standard that we can select? Can anyone put it in the chat box? Like, so when we say that we want to report the GRI based, as I mentioned, global reporting initiative, where we have a different series of data, like example, environment related, social related, and of course, economic related, certain data we have to report, right? So there, select the topic standard when we say, what are the topic standards we are talking or referring over here, right? Can anyone say that? Maybe in the chat, you can put in the chat box. I can't see actually. I need to maybe over there, chat box. So yeah, so topic standards, maybe you can try from your side. So topic standard could be what? Your topic standards related to certain areas that we are looking at, right? Yeah, Mr. Rakesh, you have raised your hand. Maybe you can put it in the chat box. That would be great.
Dr. K. sir has joined.
Oh, okay, perfect. So Dr. K, sir, thank you so much for joining in. In fact, so what I did, I just tried to offload your small burden, in fact. So I tried to address few basics. In fact, I just now shared that what is the GRI standards, basically, what are the main frameworks, maybe 200, 300 series, how this all are linked to your overall reporting, okay, and how this is actually giving the base to many other a mandatory reporting system across globe. Like example, GRI based, finally people have understood and taken up in our BRSR, or it can be in a part of CSRD and multiple other reporting system. So with this, maybe anyhow, our speaker, our star of the day has come. So I'll quickly hand over to Mr. Ravi Chandranji. And of course, he will take us through much more, you can say in detail about our subject today. And of course, he'll be of course addressing all the questions, and of course we all are there to address the same. Thank you so much everyone, and hand over to you, like Raviji, over to you please. Thank you. You are in mute in case you are speaking, please.
Very good afternoon to everyone.
Yes.
And very many thanks for the discussion on such an important topic initiated by the Sustainability Committee of the Bangalore Chamber of Industry and Commerce. The GRI standards. I think there is an echo. Is anybody? Oh. There is an echo. Shall I just log out and log in again? Rupa, can you just permit me?
Yes, sir. Please, sir.
Is echo is there? No.
No, there's no echo now. There's no echo.
Not.
You can continue.
No, it's
Fortunate.
Perfect. Yeah.
I was held up in court, so I couldn't join on appointed time. And first of all, express my apologies for this delay, which was, of course, very usefully used by our chair. And the consolidated set of GRI standards will be seen now. We will also see the GRI sector program and the list of prioritized sectors. And most importantly, we will be seeing the material topics which are considered, and the examples, for example, will be a non-alcoholic beverages sector or financial services sector. Some headlines we will be running through. The whole effort of me today will be to give an overview of how is the structure of this sustainability reporting standards. How do they proceed? How they give opportunity to the industries to select what are the material topics and what information is required to be gathered, collected, verified, assessed, and thereafter put in place in a particular form so that globally the information is understood. Firstly, I would like to take you to the GRI consolidated set of standards. If you see here on the screen, the GRI Foundation, GRI 1 Foundation 2021 will give you a view of the consolidated set of GRI standards so that we get a complete idea. And this document has been designed to promote sustainability reporting developed by the Global Sustainability Standards Board, a multi-stakeholder consultative process, and it is evolving, it is going on. See, the GSSB is a multi-stakeholder consultative process, while the GRI Board of Directors and GSSB encourage the use of sustainability reporting standards and related interpretations by all organizations. The preparation and publication of reports based fully or partially on GRI standards and related interpretations are the full responsibility of those producing the same. Now, if you see here, the contents of this consolidated set is divided in these 5 headings. One is what is the purpose of these standards? We should be able to go through and understand. 2, what are the key concepts? And what is the reporting requirement and reporting principles, and additionally certain recommendations for reporting. Now, if you see the introduction in the section, it introduces, that is section 1, which is on the screen now. You can see the section 1 here. It introduces the purpose and system. Section 2, key concepts. Section 3, about the reporting requirements. Section 4 is about the reporting principles. This is very important. What happens often in my experience is we will go into the mode of answering the left-hand side questionnaires on the right-hand side. Put numbers, quantify it, put it there. Instead of that, we are supposed to go on a principle-based reporting, which will ensure quality of the reported information. And thereafter, certain recommendations are also provided, which is how the GRI consolidated set of standards shall be understood. Number 1 is, what is the purpose? Through their activities, organizations and their activities and business relationships, this is the premise under which this is generated. Through their activities, business relationships, organizations can have an impact or effect on the economy, environment, and people. And in turn, very carefully they have written, in turn, they make negative or positive contributions to sustainable development. Negative or positive. Please see, carefully they have said, they do not say it is always negative, but they say the impact shall be understood, the contribution shall be understood, and on the touchstone of sustainable development, effect on economy, effect on environment, effect on people, and whether it is negative or positive. Sustainable development is the key, and it refers to development which meets the needs of the present, beautifully articulated, which meets the needs of the present without compromising the ability of the future generations to meet their own needs. This is what is sustainable development is understood. Needs of the present without compromising the ability of future generations of posterity to meet their own needs. The objective of sustainability reporting using GRI Sustainability Reporting Standards is to provide transparency as to how an organization contributes or aims to contribute to sustainable development. See the way in which they are transforming the understanding of the organizations. Organizations traditionally are given to understand reliability of true state of affairs of a company or organization. Everything is quantified and numbers are looked at from the point of growth, from the point of profits, from the points of returns on investments, from the point of ability to meet the interests of all the stakeholders, which could be the environment, the employees, the customers, the creditors, the stakeholders, other, and the which we are the investor, which could be shareholder, which could be society. The trade double C, the double E, double S. That is how the organizations have been going on and thinking about in its reporting. That is how the law, corporate law, disclosure norms, even in India, require reporting to be. But when it comes to sustainable development and sustainable reporting, the GRI sets the correct tone that sustainability reporting standards are aimed to provide transparency on how an organization contributes or aims to contribute to sustainable development. The standards enable an organization to publicly disclose. The word publicly is very important. To publicly disclose most significant impacts, not all these sundries, frivolous, minimum, negligible, and all. Most significant impacts on what? On what I have already said, economy, environment, people, including impacts on human rights. Publicly, an organization must come forward and exhibit leadership to disclose that its impact on economy, environment, and people, including human rights. That itself will put the organization to a high pedestal, because it is coming forward to disclose publicly. And it talks about its activities and business relationships. And it is going to say about its impact on economy, environment, and people, including human rights, and how the organization manages these impacts. Please see the leadership element. It is not sufficient to provide a view of the impact, significant impact only, but also it should show how these impacts, how the organization manages these impacts. Is it transforming? Is it changing the course? Is it taking note of it? Is it trying, whenever negative, is it trying to bring down the negative impact? Whenever positive is it trying to improve the same? This enhances transparency on the organization's impacts and increases the accountability of the organization. Therefore, this particular paragraph on purpose of the GRI standard is a manifestation of the organization's governance goal change. It moves way beyond the financial reporting, transparency, ethical, and true and fair view, integrity, and all these things we have always been talking about. The standards contain disclosures that allow an organization to report information about its impact consistently and credibly. This enhances global comparability and quality of reported information on these impacts. It supports the information users, you and me, in making informed assessments. For example, investment decisions. For example, collaborations and joint ventures. Decisions about organizations' impacts and contribution to sustainable development. The information reported using GRI standards can help users assess whether an organization meets the expectations. In the light of sustainability development, we should understand it. It is important to note GRI standards do not set any allocations, no thresholds, no goals, no targets, no benchmarks, whether for good or bad performance. It is simply wanting you to understand your activities and your business relationships will have an effect. If there is an effect on economy, environment, and people, including human rights, whether negative or positive, are you ready to report about it? If you are going to report, are you ready to publicly disclose the same? If there is an impact which is significant, and if it is negative, are you ready to report? How do you want to manage the impacts? And if you want to report and do this, do you agree to follow certain standards? How beautifully the 1.1 section is made. Now I'll go to system for GRI standard. The GRI standards, how do we construe it? How do we understand it? They are structured as a system of interrelated standards, including in organized and structured in three series. One is universal standards, two is sector standards, three is topic standards, and universal standards are used by all organizations when they are reporting in accordance with GRI standards. Organizations use sector standards if there is a sector in which they are operating. That is why I was referring to the sector. Two sectors I have chosen for intro only. We are not going to depth of it. Two sectors I have chosen are non-alcoholic beverages sector. Every day we use it. And the banking, financial, insurance sector, BFSI. Every day we use it. That's why I chose these two sectors to understand how GRI standards require impact study and reporting. Now, general disclosures or GRI2, they contain disclosures that the organization uses to provide information about its reporting practices, about its activities and details, governance and policies. And third one is material topics. What are those material topics? We are going to see it now. Now, this is how the chart is made. Universal principles, disclosures, etc. Sector standards and topic standards. Topics are material topics. We will go to material topics also. We will go to the sectors also. Now, using the GRI standard, it is required to know that an organization cannot comply with a disclosure or a requirement in a disclosure for which reasons for omission are permitted. This is why I am reading is only one is there are some methodologies which are required to be followed by the reporting organization to ensure that they do not miss out anything, they do not under-report anything, they do not hide any information, or that therefore the standards have been prepared in such a way that they have to be reporting this. For example, under reporting requirements, if you see, requirements are presented in bold font. This is a very interesting and very important understanding dictionary. Requirements are presented in bold font. They are indicated by the word shall, which means if an organization were to claim that they are reporting using GRI standards, there is no way that organization will not report and meet these requirements because the requirements are shall. An organization must comply with the requirements to report in accordance with GRI standards. Two, the requirements may be accompanied by guidance, some literature, some inputs. Guidance includes background information, explanation, and example to help the organization understand these requirements. So in the standard, certain guidance are accompanying those requirements which are in bold. These are helping the organization which is reporting or undertaking to report to better understand the requirements. The organization is not required to comply with the guidance. Then comes the recommendations. These standards may also include recommendations where a particular action, course of action is encouraged. The word should indicates a recommendation, contrary to the word shall, which indicates a requirement or compulsory requirement. A recommendation is preceded by or marked by the word should, and a possibility or option is used with the word can. And now comes how do we understand the reporting format. The reporting format refers to the process of reporting which starts with an organization determining its material topics. So therefore, whenever an organization proceeds to report using GRI standards, there is a compulsion for the organization to determine the material topics. And how do you determine material topics is already a standard. and most significant impacts and results in the organization, publicly reporting the information about these impacts. Therefore, the organization can public or make information in a range of formats. Formats are, of course, paper-based, location-wise, standalone, web pages, annual report, integrated report, and whatnot. If an organization intends to publish a standalone sustainability report, why I am reading this is certain organizations intend to publish a standalone report only, our sustainability report. It does not need to repeat the information it has already reported elsewhere in public domain in the website, web pages, or annual report. In such a case, the organization can report a disclosure by providing a reference as to where the information can be found. For example, a link is provided. Such a granular way assisting and guiding the standards having structure. Different standards, different effective dates and all will come. Those things we are not going to talk on effective date now. This program is to create an awareness on requirements and how. For example, foundation has an effective date of 1st Jan 2023. This means any organization that is using GRI standards must use it, GRI, make use of GRI 1 whenever it publishes any information after 1st January 2023. Now, what are the concepts? Firstly, most important concept is impact. Second is, of course, the material topics. Now, if you see these two itself, we will be spending quite, we can say 5 to 10 minutes. Therefore, I will read it out very in a limited way and proceed to the next topic. Impact refers to the effect an organization has or could have. The language is very, very interesting and important. Has or could have on the same three things which I have already said: economy, environment, and business, the relationships, people, including effect on human rights. These impacts can be, I'm slightly zooming it also. These impacts can be actual, potential, negative, positive, short-term, long-term, intended, unintended, reversible, irreversible. This is, in my opinion, very, very interesting, most beautiful sentence in this understanding of what its impact is. How guidance is given to the apex body called the board of directors of an organization. Actual or potential, you are supposed to understand. First, study the impact, understand the impact, define the impact, then see whether it is actual or potential, whether it is negative or positive, whether it is short-term, long-term, intended, unintended, reversible or irreversible. The board will be armed with this kind of inputs so that it can take necessary action and answer this point, that how it intends to manage the impact. For that purpose, this study is required. And the organization's impacts on the economy means what? Organization's impact on environment means what? Impact on people means what? On impact on economy means the economic systems at local, national, global levels. An organization can have impact on the economy, for example, through its competition practices, procurement policies. For example, we know that under the sustainability standards or sustainable development goals, there is a requirement to buy materials, procure materials, use resources around the location. Firstly, that is the first preference. So its competition practices, its procurement practices, taxes and payments, these can give the impact on economy. Second, impact on environment. What is the impact on living organisms, non-living elements, including air, land, water, ecosystem? The organization can have an impact on environment through, for example, use of its energy, use of land, resources, water, natural resources. For example, I heard in Indonesia where natural resources are mined, there is an obligation when license is given that they have to do equal amount of repair and remedial efforts. There is a social responsibility of organizations which are utilizing, extracting natural resources. An organization's impact on people, it can impact individuals and groups and communities and vulnerable groups, displacements, society can be harmed. These impacts of the organization could be on human rights. An organization could have an impact on people, for example, on account of its employment practices, wages it pays to employees, its supply chain, working conditions, working of suppliers, working condition of workers or suppliers, products and services, safety, accessibility. These are all, in fact, recently when for on behalf of BCIC in a knowledge partnership with the Karnataka State Pollution Control Board, I had pointed out about the extended producer responsibility where life cycle, full product life cycle assessment has to be made. And it can have an organization's products and services an effect on safety and accessibility. I was referring to the asbestos content used in J&J's talc for the infants and children. I was referring to Volkswagen's cheat device to show that how an organization could impact by employing devices which will show as though they meet the best pollution norms in NTO, that is nitrous oxide. Therefore, an organization's impact on economy, environment, and impact on people, including human rights, will have to be studied thoroughly. This para number 1.1, this impact study, if it is not understood, if it is not studied, if it is not structured, the governance at the top has a problem. A deficiency in governance can be understood when the organization does not take care of a study of impact of its activities and business relationship on economy, environment, and people. An organization's impact are interrelated. How? An organization's impact on economy, environment, and people are interrelated. For example, an organization's impact on economy and environment can result in impact on people, their human rights. Similarly, an organization's positive impact can result in negative impacts and vice versa. For example, recently I was told, which I am yet to study and understand properly, but for example, we can tell it, an organization had made huge profits by violating the norms specified by the Pollution Control Board in relation to a particular manufacturing activity. And the contention, the highest contention taken was all these monies are monies illegally obtained. And therefore, PMLA was invoked, that is money laundering. The aspect of PMLA and all, let us forget it, but it is ill-gotten wealth. That is how the transformation is taking place across. We think that there is a need for understanding it. We think that there could be an economic impact, environmental impact, and ultimately it could be an impact on the people. Now, material topics. Second important. Material topics is supposed to be identified by the organization. When using GRI standard, the organization prioritizes its reporting on these topics, which it only does it. Of course, there will be a guidance how to choose it. Examples are anti-corruption, occupational health and safety, water and effluents. A topic need not be limited to impacts on economy, environment, or people. It can cover impacts of all three dimensions. For example, an organization might determine that water and effluents is a material topic, which I was telling you about the example. The entire profit is supposed to be disgorged, supposed to be treated as ill-gotten wealth. That is the kind of tomorrow's consequence we are seeing from today's activities that have an impact. The GRI standards will be able to highlight what is your impact relating to water and effluents on the ecosystem, on the local communities to access water. The GRI standards group impacts into topics like water and effluents, help organizations to report cohesively about multiple impacts. These are the ways in which top management sitting at the apex level at board is supposed to consider this. The process of determining an organization's material topic is an identification and assessment, and it involves engaging with relevant stakeholders. Now, what is sustainability reporting and financial and value creation reporting? The GRI standards enable organizations to report information about the most significant impacts of their activities and business relationship on economy, environment, people, including human resources. Such impacts are primarily important to sustainable development. Sustainability reporting is therefore crucial for financial and value creation reporting, because today people have, at least educated people, literate people, and socially conscious people who may be literate or not. Socially conscious people have come to understand and relate the financial reporting to value creation through sustainable practices. Is it obtained through fair and sustainable means? Your number could be flashed, but together with that, a person who is reading and understanding is supposed to look at, are these numbers obtained through fair and ethical and sustainable means? This conscious awakening is a beautiful, I will say, transformation in the way in which people are going to understand. People, in the sense, maybe in the beginning, it may be the investor community. Maybe it is a government which will take action. Maybe it will be the employees and the nearby society, and later on the whole world. That is how it will translate. And therefore, sustainability reporting is very crucial because it helps make financial materiality judgments and what to recognize in financial this thing. Then comes the requirement for due diligence. Means what? A due diligence is nothing but a process through which an organization identifies, prevents, mitigates, and accounts. See how they have conceptualized it. Identification, prevention, mitigation, and how it addresses actual and potential negative impacts on, of course, the EEP, the economy, environment, people, including human rights. The organization, the way it is involved in negative impacts, determines how the organization should address these impacts. It also determines whether the organization has a responsibility to provide for, or cooperate in remedial measures. Therefore, organizations should avoid causing or contributing to negative impacts through its own activities and address such impacts when they occur by providing for or cooperating in remedial measures through legitimate processes. In case negative impacts are directly linked to the operations of the organization, products of the organization, services of the organization, by its business relationships, prevent or mitigate them. If it has not contributed also, the relationships are contributing. Therefore, due diligence is important. Now comes the stakeholders. I am reminded about Section 166 of the Companies Act. In the Companies Act, a very interesting provision was made, introduced the first time under the 2013 Act. It says the duties of directors. The very first duty, I'll read it out. A director of a company shall act in good faith in order to promote the objects of the company for the benefit of its members as a whole and in the best interest of the company, its employees, shareholders, community, and for protection of environment. Under Companies Act itself, that duty was brought as a first and foremost duty of every person who claims to be a director of company. Stakeholder are individuals and groups under GRI standards that have interests that are affected or could be affected by the organization's activities. Common categories of stakeholders are business partners, civil society organizations, consumers, customers, employees, workers, governments, local communities, non-governmental organizations, shareholders, investors, suppliers, unions, vulnerable groups. So when we talk about stakeholder, let us not be guided by a narrow definition of a shareholder, investor, customer, creditor, employee alone. That is why the WCWSS say customers and creditors, employees and environment, society and stakeholders. So broadly, we need to understand, take into account. That is why due diligence focuses on identifying stakeholder interests that are likely to be or that could be negatively affected by the organization's activities directly or through business relationship. Now, reporting. Overview. Apply reporting principles. Report disclosures, general disclosures. Determine the material topics. Material topic disclosure, you make it. Report disclosures from topic standards. For each material topic, there is a topic standard. And provide reason for omissions. In case you are omitting something, you need to put reason for that. And publish this. Therefore, the structure is given with the guidance also. Now see, into the general disclosure, normal, as we can also define this. Organizational details. What are the entities? What is the period? What is the reporting frequency, reporting contact point? What are the restatements and external assurance? A very simple guidance is provided. Shall report all disclosures in General Disclosures 2021. Now comes determination. How do you determine it? The organization shall determine its material topics. Review the GRI sector standard that applies to the particular sector. Determine whether each topic in the applicable sector standard is material topic for you. The material topics in the sector standard, for example, I was referring to non-alcoholic beverages. I was referring to banking, financial insurance, BFSI. So that standard, which is underway for that sector, already sets out various topics as material topics. But in your organization, have you decided that as your material topic? Or is there anything which is not material? If it is so, are you explaining why they are not material? Therefore, kindly see the material topics guidance 2021 for the purpose of material topics understanding. Now comes reporting. The reporting shall be, what is your process? What is the methodology by which you have identified material topics? Give a list of report a list of material topics and tell how do you manage it. Reasons for omission are permitted only in management of material topics. This is a caveat which has to be understood. An organization cannot comply with disclosure 3 and 3. With the requirement of disclosure, then the organization is required to specify in the content index itself what is the reason for the omission with an explanation. So the report requirements, material topics are covered. Now, report disclosures from the GRI topic standards. For each material topic, give report disclosures from the topic standards. The disclosures are defined line items. You are supposed to give that. For each material topic in the applicable sector, either report the disclosures from the GRI topic standard listed for that topic or provide not applicable reason for omission and required explanation. This is how they are requiring you to make disclosures. This is a very important requirement, requirement number 6. Provide reasons for omission for disclosures and requirements that the organization cannot comply with. For example, how the permitted reasons can be given are also given there 4 reasons, only 4 reasons. 1, not applicable. If it is not applicable, explain why it is not applicable. There is legal prohibition. In case there is a legal provision, you are not supposed to disclose. You say, what is that? This will hardly arise. Confidentiality constraints. If there are confidentiality constraints, yes, you can provide specific confidentiality constraints. For example, somebody is working in space sector, atomic research, something like that. There could be some confidentiality constraints which can be studied by the company, which is the organization which is engaged in the particular sector. Information which is unavailable. If it is not available, if it is incomplete, state that. When the information is incomplete, what is the part which is not there, you should say. It's not sufficient if you say it is unavailable. It is not sufficient if you say incomplete, and explain why it is incomplete, why it is not available. And also, don't stop there. Describe the steps taken and expected time frame to obtain. When are you going to give it? State that. This is called the governance guidance document. Reasons for omission are permitted for all disclosures from the GRI standard, except for reasons for omission. I have said 4 reasons are there, and we studied these 4 reasons just now, and they are not permitted except for example, you can't say organization detail itself you will not give. You can't say what are the entities involved in the sustainability reporting. You can't say reporting period and all I will not give. So information which is relating to certain disclosures on material topic, there could be a reason that you can provide, but you can't provide these kind of general requirements which are given here 2.1, 2.2, 2.3, 2.4, 2.5, 2.3, 1.3, which is important, which has to be given. There is no escape for that. GRI content. This is a methodology, this is a structure, this is an index. How do you publish an index? This also requirement 7 is publishing. Publish a GRI content index which title, statement of use, title of the GRI 1 which is used, and all those things. It goes up to the omissions, reason for omissions. Now provide a statement of use. The organization shall include the following statement in its GRI content index. It is like a bibliography or reference or something like that. The name of the organization to say that it has reported in accordance with GRI standards for the reporting period. Starting and end date should be given. These are all the requirements. Then there is additional requirement, notify GRI. Report registration at globalreporting.org. That's all. So stopping here with the general guidance on reporting, I will dwell on material topics for some time. GRI Material Topics 2021, which requires how to guide, how to determine. This is very important, is part 1. Second part is only disclosure. Disclosure is not about what are your material topics. Disclosure is also about process to determine the material topics, disclosure of material topics, process to determine this material topics, and management of material topics. So let us understand the context here in this screen itself. Understand the context of the organization. What are your actual and potential impact? Whenever say impact, please remember impact on economy, environment, people, including human rights. Whose impact? Organization's impact through its activities or business relations. What is the nature of study? The study is the impact for a particular period. And the impact would be so many qualifications, short term, long term, permanent, potential, actual, remediable, reversible, not reversible, everything. So now, understanding the organization's impact is an important requirement of GRI standards. Guidance. An organization reporting to under GRI standards will require material topics to be identified. And what is the guidance? They identify the material topics like this. What is your under organization, where it is engaged, what kind of operations, all those things let us study and prioritize most important material topics 1, 2, 3, 4, 5. Like that, we need to go through a process. These steps which are mentioned here, first 3 steps, 1, 2, 3, they will say your ability to determine the process to determine the material topics. This is how it should be done. Then I will take you to page number 60. The organization is required to determine the process to determine the material topics. What is the process it has adopted? How did it identify these are all my material impact topics? How it has identified the nature of impact, actual or potential, negative or positive, and on what? Economy, environment, and people, including human rights, and through what activities, business, and how it has prioritized based on significance of the impact, and specify the stakeholders who have supported in this process of determining material topics. The experts whose views are considered say that this is how we went through this. Now let me take to next one. List. Let the organization give a list of material topics. You can see here. List of material topics. It is already in this document. Now, we are now seeing a requirement for identifying the material topics and identifying its impact and also identifying whether the organization manages, how does it manage? This is their management. So 3.1 process, 3.2 disclosure of material topics, 3.3 management of material topics. To that extent, when it comes to management, people will be required to know there is a requirement under 3.2 to describe the actual potential negative positive impact. Then the report when it is involved with the negative impacts and whether it is directly through its activities or through business relationships. And then what is your policies and commitments? What are the actions to prevent, to mitigate potential negative, to action that are addressing actual negative? When it comes to potential, we are talking about how do you prevent it or how are you going to mitigate. When it comes to actual negative means it is already happening. So what are the actions to address those and what is the remediation you are going to, and actions to manage the actual and potential positive impacts. Report the following information about tracking the effectiveness of the actions taken, the processes which are used to track the effectiveness, the goals, the targets, the indicators, to evaluate the progress, the effectiveness of those actions, and the lessons learned. See how it will be useful for others also, and how these have been incorporated in the operational policies. Use this and bring policies so that it goes from top down line. And how engagement with shareholders has informed the actions taken, how it has informed whether the action is positive. And now I will go to the project standards program list, prioritized sectors. This is a very important note on sector program, prioritized sector. Today, in this short time, we are going to see what are those prioritized sector, how many of them are there, so that each one of us will be able to understand, are we part of it? So what they say is sector, taking into account the criteria which is mentioned. There are 2 criteria. You can see here. The key criterion is sustainability impact. First of all, how did they identify a sector as a priority sector? It is identified on the basis of their sustainability impact. Now, group one, if you see, they are basic materials and needs: oil, gas, coal, agriculture, aquaculture, fishing, and all. Second criteria is to order the sectors is the potential for exploiting synergies between them. For example, the sector standard for mining is expected to share many topics with oil, gas, coal. Food and beverages can be built upon the knowledge and contacts developed on agriculture, aquaculture, fishing, like that. So, taking into account the above criteria, the standards division proposes that the following sectors will have sector standards: mining, food and beverages, textiles and apparel, banking, insurance, capital markets, utilities, renewable energy, forestry, and metal processing. And you see for each one, the sector list of sectors, they have given some activity description also. We are not going to read whole of these activities, but you can understand here oil and gas, exploration, production of oil and gas, equipment suppliers, service providers, storage and transportation, refining, marketing, ultimately coming to the consumer. Similarly, food and beverages. Food and beverages, you can see manufacturing of food, beverages, and tobacco. Coming to banking, commercial banks, consumer finance, and more so here economic impact, inclusive banking, inclusive financial inclusion, local community, and we can say some underprivileged sections of the society, and the people who are in remote areas, banking illiterate people, financial illiterate people, and economic impact thereon. All those things are the reason why impact study on economy and people will be reference to banking sector, financial sector. These are all given there. All these topics are industrial topics: transport, infrastructure, tourism, other services. All these are totally, they are given the list of sectors. Now, having understood about various sectors and the prioritized sectors, I will go to non-alcoholic beverages for the next 5 minutes and show you what is the manner in which the topics and metrics are developed. Whenever we talk about non-alcoholic beverages, carbonated, non-carbonated, fruit, juice, etc., you find fleet fuel management is a very important emission issue, because manufacturer is sitting in some place, location is in some place, and consumers are across the country. Fleet has to move from one place to another. Energy management is an important topic. Water is absolutely most important topic, and health and nutrition. Anything can happen. Consumer safety, occupational safety, these are all there. Labeling and marketing, packaging, life cycle management, impacts of environmental and social impacts, and ingredient sourcing, these are all done. For example, I can take you to page number 28 for ingredient sourcing. You see here, this is a very interesting point, that's why I took it. Percentage of beverage ingredients sourced from regions with high or extremely high baseline water stress. The entity has to first identify where does it procure the water, and it should see what is the kind of stress on the water, extremely high baseline water or high, all those things they have to identify. The entity is required to disclose the percentage of beverage ingredients sourced from regions with, if that region is already suffering from water and you are taking the water for your this thing, straight away it has an impact on the people also, impact on the society, impact on the environment. The reason why I took this metrics, particularly for the topic called ingredient sourcing, because the entities in the beverages industry, non-alcoholic, source a wide range of ingredients worldwide from various suppliers. Now, these industry's ability to source ingredients fluctuates with availability of supply, which may be affected by climate change, water scarcity, land management, other scarcity resources, This exposure may result in price volatility and ultimately climate change, water scarcity, land use restrictions that present a risk to the sustainability of the long-term goals of the organization. The entity's long-term ability to source essential materials and ingredients will be tested on these parameters. That is why I thought in beverages industry, let us read the priority with respect to how and what. You can see here list of priority beverage ingredients and discussion of sourcing risks related to environmental and social considerations. Now I will move to in the next another 5 minutes to the standards which are for financial services sectors. In this particular screen itself, you will be able to see disclosures incorporating sustainability in banking and investment. You can see what are the various key indicators on topics which the sustainability reporting requires you, and you need to apply mind on that. Climate change, biodiversity, financial health and inclusion, marketing, local, etc., etc., etc. So this much of parameters or factors are there in order to give a incomplete report is possible. But giving a complete report, that sector standard, that material topics, that process, that ingredients is very important. I'll take you to a important topic in financial sector called crime. Prevention of corruption and financial crime. Anti-corruption refers to how an organization manages the potential of being involved with corruption, because corruption is practices such as bribery, facilitation payments, fraud, extortion, collusion, money laundering, or offer or receipt of an inducement to do something dishonest or illegal. Closely related to corruption, financial crime includes various forms of theft, misuse for economic gain. This topic covers impacts of corruption and financial crime. The losses from corruption are estimated to be worth over 5% of the annual global GDP, redirecting funds from essential public services to such as education and healthcare. This kind of theft, this kind of corruption, this kind of public money, when it is looted, when it is removed, that kind of impact is there on the public services like education and healthcare. Organizations can become involved in corruption and financial crime through connections to the broader financial system and criminal activities targeting customers. The next one I want to read is financial inclusion. Financial health and inclusion is the ability of an individual, household, or organization to effectively handle financial commitments, risks while enabling achievement of future financial goals. Financial inclusion guarantees affordable and effective access to all individuals and organizations to use suitable financial products and services. This topic covers an approach to the financial health and inclusion. So I have given a kind of we can say an awareness intro and dwelling on a particular sector standard and a particular material topic like emission, water, waste will be done in a series and subject to availability and allocation by the committee and the Bangalore Chamber. We will be meeting again in order to gain some in-depth knowledge on sustainability reporting requirements in relation to one or two select sectors. I want to dwell in depth so that the people who are practicing in that sector, for example, banking finance, I have chosen because it is all pervasive. It applies to you and me. Food and beverages, it is all pervasive. It applies to you and me. Therefore, with that note, I would like to conclude this session, thanking the BCIC for this opportunity and thanking the participants for this patient hearing. Thank you.
Thank you, sir. We have enabled the audio for all the participants. In case if you have any queries, please go ahead. Hello. Hello.
So maybe we can have a session on some special priority topics and sector at another opportunity.
Yes, sir, definitely. Mr. Mohan, we have the mentor of the committee also.
Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah, thank you. See, first and foremost, I think for me it was a good refresher of what I knew, because Dr. Ravichandran, you gave many examples from your experience, and this enabled, certainly it has enabled me to understand the alignment between GRI and BRSR, and certainly it would have made similar impact on all the participants. As you know, GRI is more overall. If you look at GRI, it's a bigger requirement compared to BRSR, because the foundation for BRSR is GRI standards, and GRI standards are accepted globally. And since either as tier 1, tier 2, tier 3 suppliers, finally the industries would be supplying to the global customers. Since BRSR is evolving in India in terms of more and more industries and sectors needs to report, GRI would also having knowledge about GRI would help industries to make it more comprehensive so that it meets the global standards. It was very well explained, and as you rightly said, if you take examples of sectors, it makes understanding that much better. And we can also have some sort of sector specific, webinars. So this is my thoughts. And Rupa, thanks for organizing this webinar. I know Ravichandran is busy and he keeps moving around, and in spite of his busy schedule, he has taken time and joined this webinar. And Rupa, we can plan for a few more webinars on the topic, because this is very vast, and the more we discuss, it makes our understanding better. And lastly, even for the participants, please use your specific queries from your own experience at your industries, and seek clarifications. Either you can write to us or use such webinars to ask questions, so that it makes the understanding better. Thank you. Thanks, Dr. Ravichandran.
Thank you, sir. Dr. K, sir, before we conclude, there is just one question which we received just now from Mr. Hemant Kumar. He has mentioned with respect to materials topics, process disclosure and management, how can any organization manage the long-listed materials topic and still achieve the target?
Yeah, I'm also able to read the chat. There is an echo. Can you just mute? I will answer it. The material topics, yes, material topics is a process to identify material topics. And they are based on significant impact, not ordinary impact. There could be an illustrative list of material topics provided. But organization must apply the GRI material topic process and list out, yes, A, B, C, D are the material topics for me. Once it decides, then it has to give the impact and also it has to give the remedial and manage how it manages the impact. Therefore, it may be more material topics in a banking sector could be so many which I have said. But what is your significant material topic? For example, child labor may not be an issue at all in an industry where there is no way a person less than 21 is going to be employed at all. But you see the reach in respect of certain very important topics like financial inclusion. Targets are achieved not with any goal like net zero, I must get it by 2070, the whole India. It's not like that. We are understanding, yes, this is a problem. It is potential or actual. Is it coming from me directly or through business relationship? Is it significant? Is it reversible or not? If it is not, how do you address it? Like that, the standard help you to understand there are material topics, impacts thereof, and accordingly plan your strategy, business plans and activities so that go back to the definition I read on sustainable development. Sustainable development is the development that ensures the future posterity, future generations are able to meet their aspirations. So there is nothing like telling you should do it today. That will be left to the board of directors of the company to set certain targets. That will be, of course, achievable. Normally, when I was sitting in the board, Mohan, I will add one quote. When I was sitting in the board and we used to have a business performance review, I always address this point. A target is not a target if it is achievable. It should be challenging. Thank you. So, Rupa?
Sir. That's it, sir. Thank you very much.
Yeah.
Thank you very much, sir. And thanks to all the participants for attending this session. And we look forward to have the continuation series in this edition on that subject, sir. Thank you very much once again to all the leaders of the Sustainability Expert Committee. Thank you, sir.
Thank you. Bye-bye.